A disinflationary environment combined with a strong euro is a dangerous combination and one which, according to some, is causing concern for investors. So looking past the single currency, is the Scandi success story continuing, or has the ECB set the trend with their surprise rate cut? Joining me to discuss is Erika Blomgern. Erika, Europe's most important data today may be the Norwegian CPI. The Consumer Price Index rose 2.4% year on year in October, slower than a 2.8% rise in September, and out with Norges Bank's targets, sparking anticipation of a rate cut and weaker krona. But what is the main message to take from these figures, would you say?
Yes, well, the inflation numbers were edged up slightly more than expected. But in the short run, we expect core CPI to stay well below Norges Bank's forecast. But I think the main message the main take from the inflation numbers is that it's strengthened our impression that the core inflation rate is unlikely to return to the low levels seen in 2012 and in the beginning of this year. So even though inflation has been very volatile recently, it does show that the trend has shifted upwards. So I think that in itself is no reason for Norges Bank to considering rate cuts. But of course, market is increasingly speculating in a rate cut following ECB's surprising move this Thursday. And I think that the Norwegian krona has been very vulnerable and performed very badly throughout the year. And I would say it's a combination of poor liquidity, deteriorating economic momentum, and also weak monetary policy transparency or dovish Norges Bank. That are probably the main factors behind the NOK depreciation. And then again, with lack of support from the previous so-called quality-seeking flows, the currency has traded very volatile as well. But our view is rather that growth momentum should pick up, even though mainland GDP growth will remain below trend, and that should also help or be visible in both improved and less volatile data releases. At the same time, we are not subscribing to the view that Norges Bank will cut rates. We rather expect them to remain sidelined because the current level of both the key rate and the currency, not at least, they should be very comfortable. So I think this should facilitate a decline in volatility in the Norwegian krona, and in the short term that should be a positive thing, and why we are a bit bearish euro-NOK going into next year.
Sweden's krona dropped after a report showed industrial production stagnated in September from a month earlier. Sentiment seems to be split here, with some analysts believing the data did not hugely damage the Scandi recovery story, but to others seen as a boost of speculation of central bank intervention. Now, the Riksbank reversed their intention to raise rates just months ago. So with that in mind, what side of the fence are you on, and what is your outlook for the krona?
I think manufacturing signals have been very mixed, and short-term indicators still have to rise further to confirm our GDP forecast for next year, but we do expect growth to accelerate going into 2014, and that should, of course, be very positive for the currency. But in the short term, I think that inflation data is very important, and we have seen or will continue to see core inflation below Riksbank's forecast. So in the case for Riksbank, it's more they are more setting rates, of course, targeting credit growth. And the fact that unemployment or labor markets in general have continued to improve, and by far more than what GDP growth would suggest, they can continue to focus on credit growth. And but going forward, if you look, inflation is very subdued, and there should definitely be room for more stimulus from the Riksbank. But we think that they will remain on hold, probably until early 2015, with focus increasingly moving towards stimulating the economy and keeping rates low due to inflation. For the currency, that puts some limit to how rapid we can see the Swedish krona appreciate. But going into next year with an expected solid global recovery, also acceleration in Swedish growth, that should stimulate exports and demand from exporters for hedging. And also, of course, the Swedish krona should benefit from a more pro-cyclical pattern that we used to see. So we are definitely more positive to the Swedish krona for next year compared to the Norwegian one, with expecting a year-end target for next year at 8.40.
Denmark held with its key policy rate unchanged, breaking with a custom of following the ECB. The decision took some by surprise and coincided with an EU Commission report stating after 3 years of economic standstill, indicators are now pointing to an improvement in the Danish economy. Do you think the fundamentals warrant the move or lack thereof?
Yes, well, it was most likely that the Danish Central Bank would also cut its lending rate. But looking at the economy, I agree that there are some signs of a recovery. It's mainly based on the recent surge in consumer confidence, which is now at 5-year high. We have rising real wages and a very important factor, a stabilization in the housing market. So that suggests that growth in Denmark should be more domestically driven by private consumption. So we also have a forecast of Danish GDP to increase to 2.0% for the next year and further on to 2.5% in 2015. So the outlook is definitely improved, but also in this case, it's a matter of a stronger global outlook as well.
Erika, it's been lovely to speak to you. Thank you so much for your insights. Well, viewers, that's all from me for the moment, but the TV team will be back bringing you more currency forecasts with today's Targets in Focus, and I'll be back with our Week Ahead programme, so please do keep clicking back to Dukascopy TV.